Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive in there and see what's being shared. If you want to follow me at Finance, and if you want to join our community, finding-value.com, that's where I dive deeper into all of these topics, sectors, areas, looking for potential investment opportunities, sharing those opportunities with everyone on the in the community and on the website. And I also do midweek updates and platinum question and answer sessions on the weekends where you can interact with me directly. We have a discount going on. Discount is the coupon code. It is discount. So Peter Schiff says, despite inflation turning higher, the Fed cut rates again, but indicated fewer cuts in 2025. A rising dollar will accelerate inflationary pressures in the rest of the world, putting pressure on foreign central banks to start hiking rates. I'll discuss with Liz Clayman later today. And we did see a very big move in the dollar and in interest rates. We also saw, which I do want to pull this up real quick. So we saw the S&P 500 drop dramatically here. Big time move. Is this a beginning of a further big selling pressure move? This big move lower will also impact the crude oil to S&P 500 ratio. You can see that we are breaking out of that ratio here with a very big move, with crude oil basically holding steady and the S&P breaking down. When we look at this, and I don't know if this is it or not, but it looks like we could be at the beginning of a shift where we're putting in this double bottom and we've broken that to the upside, where we start to come higher again in energy. And I know people are going to be confused. We saw big selling pressure today in the ETFs, XLE, XOP, OIH, all the energy stuff. But this is the beginning part of that move. And it depends on how fast the S&P 500 sells off. Sometimes this triggers some margin calls if we get a large enough sell-off. But this looks pretty ugly in my opinion. And I don't know if this is the ultimate top. I don't want to be a top caller trying to predict that. But we could see a rollover here. And we'll see what kind of follow through we get. We could get these small little up days and then another hit. We're also seeing the VIX spike quite dramatically, and that is here. There's the dramatic spike in the VIX. So Eric Nuttall, let's talk energy. I like talking energy because I think that's an opportunity there. It says over the past 10 years, non-OPEC supply has grown by 5 million barrels a day. U.S. shale, part of that number, has grown by 6 million barrels per day. This is why the twilight of shale is so incredibly important. Modest growth in 2025, negligible growth, declines thereafter. The world is not ready for this. And here is lower in potential production of U.S. oil. Now, here's is the case. It's going to impact interest rates in a way that's going to increase the interest rates. What interest rates are is a function of inflation. Inflation is a function of money creation and GDP. The difference between money creation and GDP, the gap between that difference is inflation. And if you get a larger and larger gap, because GDP is crude oil with a R squared value of 0.996, it means that if you get GDP growth, you get oil growth, or better said, oil growth is GDP growth. So if oil cannot grow worldwide, you will get declining GDP. And then you're going to get larger inflation because the system will have to continue to print money, and then you're going to see interest rates go up and up and up and up. And I think this is what they are afraid of. Governments, Federal Reserve, to central banks and governments is what I'll just say in general. And they don't want people running into physical metals. And that's what could trigger a crisis is people getting worried. So they try to control the price of gold and silver. They don't want it to go up nearly as fast as what could cause a panic. So I think they're trying to hold this all together. But Eric is completely right. Oil is going to be the thing that limits GDP growth, which ultimately will expose how much money we are printing. And the difference is inflation, and that difference of inflation is going to send interest rates up, 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 which we've broken that big downtrend. Nugget Capital Partners says money managers all chasing performance and don't want to be affiliated with losers to the end of the year. Creates opportunity for the retail investor, smaller funds in out of favor stocks, out of favor asset classes. I wouldn't be able to sleep at night if I were long QQQ. And it says if you're a professional investor running a portfolio or managing money, can you own the energy stocks right now? She says, no, you cannot. This is year-to-date returns versus the Mag 7. I've sold all my energy stocks in insider trader and value investor portfolios, ZOM, XLE, and MAGs. I would argue the exact opposite. Now, I can't own the Mag 7. It's overpriced, and with interest rates going up, I think they're going to come into incredible headwinds. And here's the stocks there. I prefer to go into energy because that is where the opportunity lies. Here's crude oil divided by the S&P 500. There's that chart I was showing you earlier of this breakout. This is where you need to get your cues from. You don't look backwards and look at the backwards, year-to-date performance. You need to look forwards to see what things are squeezing up and are about to break on higher. We are basically at a very low area for crude oil divided by the S&P. Last time I bought it here. Or no, sorry, I bought it here. So we bottomed up, came down, and that's where I purchased a whole bunch. Then we went up, and we've been consolidating here. And we've consolidated into a corner. That corner consolidation is broken out here just recently. That, to me, looks like we have an opportunity in crude oil. We can also price crude oil in the NASDAQ, which the NASDAQ's been on a tear. So the way that I view this world, you want to be bullish on the NASDAQ, bullish on oil. You can see I put the arrows there in the bull oil, bullish on the NASDAQ. And most recently, you should be bullish on oil as we've broken the downtrend in October, November of 2020, and that's where I purchased a lot of my shares. And then we come on up and we have been consolidating. Now I can manipulate this chart a little bit where we do this and then we can do it like this and I can hug up the bottom there. So we've been in this falling wedge that we haven't broken out yet but we are looking to put up some big green candlesticks here probably very soon. And that's where your outperformance is going to be. There's the chart and the pattern. You guys can see it. If I can grab the top one here. Just like that. We haven't broken out yet, but we're real close to. And that's what I'm looking for. This is where you get your good entry points, right where you are. Now, XOP and some of those, they've been selling off. That's correct. That's what this consolidation is, coming into the corner there. So I think it looks fantastic. So I would do the exact opposite of Tracy here, in my opinion. Javier Blas says, coal, a statistic. In 2024, the world as a whole has burnt in just 12 days as much coal as the UK did in an entire year at the peak of its coal consumption era in 1913, when everything from locomotives to home stoves to industrial furnaces to power plants relied on it. We are burning way more. So here's another thing to think about. A lot of people talk about an energy transition to something like renewables. If we couldn't get rid of coal, and we are now burning more coal in 12 days than what we did in its entire year in 1913 for the UK, what makes you think this transition is going to occur? I don't think it will. I think it is all additive. I think that the energy demand going forward is astronomical. And I don't know if our supplies can keep up over the next, say, 10 years. So I think the biggest theme for investing is around energy. And I think that we're coming off of a financial um, bubble, both one in bonds, and then number two, I think we're going to see a rollover in the Nasdaq and also the S&P 500, and then we'll either trade lower or sideways in those for an extended period of time, say 10 or 15 years. And energy is going to be an outperformer. There could be some other outperformers too. I think gold, silver will do incredibly well. Massively bullish on all three of those sectors. And all you have to do is look up on some of these ratios what's going to outperform here. So XLE energy sector's been crushed and its RSI is in the bottom 0.2% of all historic readings. Outside of COVID, this was bullish for XLE. I'm buying here for a bounce. And there we are in the green. Look at how low this is. And there's been very, very, very few times in history that it's been this low. Looking for a potential bounce here. At least he is. And I would too. Instead of being poor, you could literally deposit $2 million into a CD paying 8% interest, collect $15,000 a month, never have to work again. What's stopping you? Inflation. Inflation is going to stop me. You can put that money in there, but I don't think you're going to get the same purchasing power money back, even at 8%. So that's the problem with the dollar. That's the problem with using fixed interest rate debt. And if you look at the US 10-year, so here's the US 10-year here. This is breaking to the upside, guys. This is no bueno here. This is going higher. So if you were to buy bonds, what you're going to see is you're going to see a massive decline in your purchasing power over time. So your money that you put in there for 2 million is declining in value. So if you had done what he exactly what he said, you'd be down 1.6% today. But let's say you bought it here at 106 and now it's trading at 89. And you would ladder it and stuff, but let's just say you had $500,000 in there divided by at about 106. You have 4,000 something shares. And then now, if you multiply it by 89.16, it's now only worth $420,566. So you're actually losing money if you're buying long-term bonds, at least, doing that. Now, a CD, I don't think you'll actually lose it, but bonds can be very dangerous. And right now, this looks like it wants to go lower. This does not look good for bond prices. This is here, I saw this. It says, you aren't in a pyramid scheme. You made up internet coin is special. I just thought that was funny. Sorry, guys. JSG says, comparative inventory plot for EIA weeklies using data through 12/18/2024. Implied WTI fair value price of $87 or $16 undervalued from current market price, on pace for a small QTD draw for Q4. So quarter to date draw, still drawdown. So we're a little bit over, we're about a 1.5 sigma delta from what we'll call the standard. So we're 1.5 standard deviations below that fair value up here. So the current price should be somewhere in this range up here if you look, and you go straight up from that value. Joseph says coal will not stop growing unless all three of the following things happen. Battery manufacturing and deployment catch up to renewables expand, prices are cut, a carbon price is tacked on the coal price to raise it to LNG parity. What I would say is this guy doesn't know what he's talking about. I don't think we're going to reduce coal in any manner, and I don't think these three are viable options. I can give a viable option, but it's not a humane one. You'll need population to shrink. You'll need the living standards to go down. And what I said above, a few above this is, we're burning more coal in 12 days than what we used to in 1913 for an entire year of the UK, and they use coal in everything. So everything's additive. I don't think that battery manufacturing will make any sort of dent. We'll run out of minerals before it even makes a dent. And I don't think anyone has an idea of just how much we would have to produce. It's a ridiculous amount. So it would never, ever, ever be cost justifiable to use at least the lithium type batteries to do that. And we would have to produce an insane amount. And I don't think people have their mind wrapped around just how ridiculous it is. And I hate to say this, but coal is technically a battery. So is natural gas. And so is oil and all of the derivatives, propane, methane, all that stuff. Those are batteries. So battery manufacturing, I hate to say it, that's what an oil company is. The earth has stored sunlight through the energy of fossils, so to speak, and we are using them, and they are basically batteries of sunlight. That's what fossil fuels are. So when I read this, I kind of just shake my head like, well, I know what he means by batteries, but the most energy dense batteries in the world are fossil fuels. And that's why a battery that we produce basically can't keep up with it, because the earth has gathered it for us, put it into these deposits for us, and they are incredibly energy dense sources. We've never been able to create energy. We've only been able to gather it from our surroundings. And this is the global gold consumption forecast going forward from 02, which is back here, 24 and 27, they have it going up. Iran's crude oil exports are at 1.2 million barrels per day during the first 15 days of December. The running average of the first 15 days during the 3 months prior was 1.7 million barrels per day. So we're seeing Iran's crude oil exports decline by 500,000 barrels. Guys, this isn't going to add up. We have low inventory. Saudi Arabia has been holding back on production, and we're starting to see some of these sanctioned areas coming back down on oil exports. It says, they say value is over. Once again, I find myself quoting Mark Twain. History doesn't repeat itself, but it often rhymes. Has Warren Buffett lost his touch? No, this is a perfect time to buy right here. Warren Buffett may be losing his magic touch 1999, and that's where he was buying before the big move higher. He's bought a lot of oil. He's actually 20% long in energy. I was watching him last bull market. He bought a whole bunch into PetroChina back in the 2000s, made a whole bunch of money off of it. Now he's got a whole bunch in Oxy. He's going to be right. He's going to be right here. And I'm going to be right with energy too, and the companies that I've selected. I think they're excellent, excellent setup coming up right in front of us. So here's Ripple, XRP. It says, Michael Saylor gets stumped for the first time in an interview. He was questioned about in the year 2140, when all the Bitcoin has been mined, what would continue to secure the network? He began to talk about how there will transaction within the blockchain, and the fees will also need to be collected by someone. Further, he explained, as the entire financial system transactions and fees. This gave me a strong epiphany about the XRP revenue generating model. So this is something that one of my friends and I would talk about the problems with Bitcoin. Bitcoin, in the mining of it, they're subsidized by Bitcoins in the beginning. As the halvings occur, things get harder and harder to mine. Each coin does. And your payout of coins goes down, 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 down. So it's harder. And then the subsidy of getting coins goes down. So you have to start to charge fees on the network. Well, what happens if you get the coins, the subsidies from the coins go way down and your fees become absorbent, like $2,000, $5,000, $10,000 to transact? He asked the question, and guess what? I don't think Michael Saylor, I think he was caught off guard. Now, this doesn't occur in 2140. This has occurred already. If you look at the price to mine a Bitcoin, it's like $90,000 or $100,000 today. If we go into a different market condition where the NASDAQ declines, and I think it's coming here at any second, what happens if we go down to a price for Bitcoin of like 10 grand? What are the fees going to be? If the fees are going to be an exorbitant amount, then they don't want to transact in it. That's going to be a huge problem. And this will be the first time, in my opinion, that Bitcoin will be tested in a condition that isn't favorable for it. We've been in a NASDAQ boom since 2011, really since 2009. And that was when it was created. And now we're going to enter a different condition where NASDAQ goes down, I think, or sideways. And I think Bitcoin could sell off dramatically. And this is where it's going to get tested. It's probably a few years out. Exxon is the most oversold since the COVID crash when oil was negative. All the momos are using energy as the funding leg, shorting to pile into Mag 7. Egon says, throughout history, a country which has not repaid its debts has, without fail, always defaulted, and the currency has gone to zero. That very well could happen. And notice that our interest rates are going up. Increasing interest rates is going to put a lot of pressure on interest expense. Going to put pressure on the currency if they try to do anything with interest rates and QE. Eric Nuttall says, year-to-date, global oil inventories have fallen by 132 million barrels and are only 42 million barrels above their lowest level in recorded history. This, while demand remains at all-time highs and non-OPEC supply growth massively underperforms expectations. This, to some, is what a glut looks like, a quote glut. He's joking, obviously. Look how low we are in 2024 compared to all the other times in history for the past 5 years here, at least. We are down at lows here. We continue to draw down. Oil price has to go up. So I think that there's something going on with oil prices. Like somebody's trying to hold this thing down. We can see there's a divergence between the 10-year yield and oil prices ever since the election. Something's going down. You can do a form of quantitative easing by holding the price of oil down, but Saudi Arabia, I think, is on top of it and says, you know what, we'll cut back production and we'll just drain inventories until they stop, quote, manipulating the prices, is what I would think. So I think all of that is going down here. And that's where we're going to end it, guys. So give me a thumb up for the content, subscribe to the channel, subscribe to the website. Discount coupon code is active. We've got a question and answer session coming up this week on Saturday, 7 a.m. So we'll catch you there. That's all I've got for today. Catch you next time. This is Finding Value.